sometimes we don't know what a distribution phase is, right? So sometimes typically the distribution phase happens when we have like a really big bull market, right? So if you're wondering, these sideways phases are really powerful. So if I bring up a thing like IBM as an example, right? Look what we have through here. So if I blow this chart up from here to here, right? And if I actually let me just I'll blow this one up. I'll blow this chart up through here. See this sideways pattern through here? And in fact, if I just blow, let me just utilize this one here. So I'm going to utilize this one here. I'm going to bring up the daily chart here for a minute, just so I can show you here. So notice how, if I'm looking at see that sideways pattern through there? This sideways pattern through here was an actual sideways pattern, but it was more like a distribution phase. Distribution phases typically happen after the market goes up for quite some time. So it's been going up, 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 up. We get the sideways pattern. And then what ends up happening, if I bring on a daily chart here now, what typically happens if the market's been going up for many years and then we end up getting this sideways pattern, what ends up happening is we end up getting, as you can see, let's see that breakdown candle there after the sideways pattern? Well, this sideways pattern here now was telling us that this is now likely to be this strong candle was telling us it's now likely to be a distribution, not an accumulation. A distribution simply means that the big boys are now starting to sell off. Accumulation is where the big boys are accumulating, and then we get a big move like we saw with platinum.